So what drove the results for DBS?
Thank you very much. So yes, DBS reported a very strong set of results on a year-on-year and quarter-by-quarter basis, far surpassing consensus forecasts. And I think its strength is reflected in its 33% rise in its interim dividend, reflecting optimism for the second half of this year. And really, its results were supported by a complete myriad of factors, but chiefly a pretty big boost to net interest income, on further margin expansion off the back of the Fed's rate hikes, and also on lower than expected deposit repricing and ample liquidity management. Now, management did expect margin would peak around 2.12%, but it's actually risen to 2.16% this quarter, and there is scope for more as the year progresses. Now, this did offset relatively slow, subdued loan growth, which remained quite flat quarter on quarter. The bank also saw very strong fee income, as wealth management activity for the bank did gain momentum in comparison to UIB, which reported last week, and also saw quite strong credit card demand as well, which we think is likely to continue into the second half.
What else should we look for, Sarah, in the second half?
So I think there is scope for further net interest income gains off the back of the Fed's rate hikes, the last on the 26th of July, and the potential for a further rate hike on the cards at the September meeting. And this again is likely to offset relatively subdued loan growth in the second half of this year. But then DBS does have a healthy pipeline of non-trade corporate loans in the bag, which could help it. Momentum in wealth is likely to continue for DBS, and particularly in the aftermath of the UBS takeover of Credit Suisse, and it will see tailwinds from its 12 million net new money gained in the first half of this year. Fee income, however, is likely now to only hit mid-single digits, and this is the second time the bank has revised down its guidance this year, and that's on more subdued and more cautious investor sentiment. Also, another thing to watch out for is the integration of Citi's retail banking business in Taiwan, which should extend DBS's lead over OCB and UOB in Greater China.